Hi, folks. This is Lee with the Market Sense for the week of August 27th, 2019. The charts in this presentation are provided to us by Gettess from their Trade Navigator software. And in looking at a weekly bond market chart here, we were kind of hoping to get a chance to maybe buy them in the 63, 14, 15 area down in here. And they have popped to new highs already. Now, I must say that new high, which is up at 67.15 currently, that was made in the middle of the night, Sunday night, Monday morning. So they were almost 2 full points lower than that by the time Monday opened, and they've kind of been working their way back up again ever since. There's only one lesson here, and hopefully it's a big one. Hopefully it's one that you will remember for the rest of your trading lives. And that is, you just are not going to make a living trying to sell a market making new all-time highs. It's a very dangerous thing to do. They can always go further and for a longer amount of time than anybody believes. There's no particular reason for bonds to be up here. They're excessive. They're not going to lower rates that much. They should just calm down. But that doesn't mean they will, and that's the rough part of it. What a market should be doing isn't necessarily what you can trade off of. So there's really nothing to do this week. They've already gone to new highs. They may turn down, they may not, but you can't sell them up here. You just can't. And I hope you will remember that. Selling a market at new all-time highs is severely hazardous to your financial health. Now, in stocks, of course, we don't have new highs to worry about at this point. We do have about as much frustration, however. The best support this week is right down here, 2809, 2811 areas where these two things converge right here, the lower moving average and the projected low. They were down there, but again, Sunday night. They were actually all over 60 points higher by the time they opened Monday morning. Very frustrating, because if they had been down there early Monday morning, boy, I'd have been in there with both hands. But, what can you say? It's the way they're trading currently, and there's just not a lot you can do about it and keep the risk under control. The move up to 2880 was the likely scenario. They've been a little higher than that, but they are not currently, so don't know if they can continue. If they do, I think the next upside target is around 2940. You should understand a couple of things. One is that they really haven't done much since this breakdown here. A lot of volatility, but even though this week poked slightly above the previous week, it's just slightly, and then this week is inside of that week. This side's gone a little lower, but it's still inside of the previous weeks. There's just not a lot going on here, which is relatively common for late summer. There's always a little drop off in volume, usually going into Labor Day. It may not be the same now, but it is still thin trading. If you try to take orders in there, you can see they get slung around pretty good. Hopefully the liquidity will pick back up and the trade will become a little more orderly after Labor Day. I would not expect it necessarily the first week, but hopefully we'll see a few more players come in and have things calm down once we start trading regularly into September. Again, wish we'd have got a chance to buy that support. If they might get up to the 2940 that's all I would really expect them to do this week. Well, unless you get a tweet that says China's wonderful, we've got a trade deal. I don't expect that, but if that happens, that could be enough to jolt the market. And of course, as I've lamented before, that's the problem. We're one tweet away from being about 20% up or down. So that's what we've got for you today. I hope you can find something profitable to get yourself into, because this is difficult.